Good afternoon, everyone. You're all very welcome to our daily market call. So in today's call, we're going to be looking at the UK market, broadly speaking. So we'll be looking at the pound, the nuclear reversions of volatility that we've seen over the last number of months. We're looking at obviously the currency index as a whole in comparison to its counterparts, and of course relevant G7 performance. So how is the pound performing to its other G7 counterparts? So I know last week we obviously done a quick deep dive into the pound. Today we're going to be updating upon that, but we're also going to be looking at the broader elements, particularly off the back of yesterday's announcement, which confirms that Rishi Sunak is going to be the third UK Prime Minister of the year. Yes, that's right, the third Prime Minister of the year, the fifth now since Brexit. And of course, what will he bring to the pound? Will he start to bring some stability that other prime ministers have failed to do so, against what has been, obviously, as I said, a very, very volatile 18 months or so? Now, I suppose the first takeaway factor we have to look at in the pound is its relevant performance over the last 12 to 18 months. And structurally speaking, from the highs of last summer, we can see till very, very recently, we were sitting at anywhere between 25 to 28% of a decline. Now, I know in the last week or so, we have seen fairly modest and robust recovery in the pound to, I suppose, those early August or early October highs. So now it'll be a case of, given that there's a little bit more clarity from a political perspective, and the standing that Sunak has, given his past experience with I suppose capital assets, and I suppose the financial markets, how will that obviously help? So for those of you who are unaware, Rishi Sunak worked with Goldman Sachs, has a net capital or a net worth of over 700 million with his wife. So has a lot of wealth in his family, and has obviously worked with hedge funds as well. So he's coming from a background kind of like Fed Chair Powell, Jerome Powell with the Fed, in terms of, right, doesn't have the political experience, but has relevant experience for the role. And I suppose that's going to be something that's going to be very, very interesting now over the next 6 to 12 months, given that we are just a little over a year away from another general election in the UK. How is that going to react, and how is the budget going to play out over the next couple of weeks or so? Now, of course, opinion polls in the general elections, for the next general election, should I say, in the UK, has the Tory party, which is obviously in power at the moment, at a minority. And of course, as things currently stand, if the election was to be held tomorrow, it would mean that Labour would almost effectively have a majority in the House in London. So I suppose that's obviously important to reconcile that, to be able to put relevance on the situation, because as we know, the pound has been massively weaker over the last 16 to 18 months, as we said. So it's all about putting perspective on that too. Now, the currency index, as we know it, has had that very, very sharp bottom. So, of course, if we were to look at the daily, I suppose, performance of the pound, we are at October highs. So the highs from the 4th, 5th of October is currently being tested today. And of course, we'll be looking at that shortly on the pound pairs. But again, it's relevant to see, can we start to see a more robust recovery in the pound? Can we start to see some positivity associated to a pound in what has been a very, very weak and bearish, as I said, 18 months or so? So as we look to the cable, first and foremost, I know last week, as I said, we looked at the pound performance. I suppose broader perspective, very, very sharp decline, currently testing that daily order block area here, and October highs just underneath the 115 handle. So from a fundamental perspective, we've seen fairly significant strength in the pound over the last week or so. And of course, with those slightly weaker dollar and outperformance today in the stock markets and the indices, it's meant that the cable has actually tilted to the upside as the pound is outperforming the dollar on today's price action. But of course, as we know from session to session, that can very quickly change, and these price movements can very quickly erode. So it's just about being aware of that. Structurally speaking, I suppose over the course of the next few days and for the rest of the week, it'll be a case of, can the cable break above this area of interest here, just under 115? So structurally speaking, yes, we do have an area of interest that could extend to 115.50. So this area as such will be, I suppose, a really interesting point this week to determine, are we going to get that kind of stronger move in these markets, and of course being able to reconcile that in the broader element accordingly. All right. Now, of course, Daily perspective, daily candle, I think is going to be key. So the next couple of days is obviously important because this week, as I said, we do have Bank of Canada, we do have Bank of Japan, we do have the ECB. So I know internally, right, the pound volatility might be starting to level out a little bit, but in the broader markets, we have to be kind of cognitive of these other central bank meetings, particularly when you're looking at pound Aussie or euro pound or even pound against the yen from a FX perspective as well. All right. So structurally speaking, as I said, this area here is going to be really, really important. Now, of course, last week we did have that 1 hour order block area. We did get that very, very sharp impulse into Friday's close. We did gap higher on Friday evening into a consolidation. And of course, today the markets are trending higher, which is giving that cable a little bit of optimism. So we're seeing optimism in pound yen. We're seeing optimism in pound dollar. And we're also seeing optimism in pound Swiss as well. So you can kind of see here, pound Swiss is also outperforming today. So anything with traditional risk safety or risk aversion, safe haven assets are obviously back foot today against obviously the pound. So pound yen is obviously trying to break through this high here, just around about 170. So structurally speaking, quite an interesting week or so. So particularly when you look at where the pound yen has been over the last few weeks or so, massive decline into 148, that daily area of interest, that liquidity area, very, very sharp bounce. We talked about it last week. We did get that initial impulse last week. We did get a pullback to 165. Now, structurally speaking, from my perspective, from a higher time frame, from a guy who trades higher time frames, I was looking to see, could we get kind of one deeper retrace into kind of 161, 162 this week. However, from a 4-hour perspective, 1 hour perspective, we've been very much holding that 165 handle. So if we look at it on the 1 hour, you can kind of see it here, a very, very strong liquidity area and very, very back and forth over the last kind of couple of days or so from the tail end of last week, where we had that gap down, obviously Sunday night, closed the gap. And then, of course, the kind of the movement today and of course, into the rest of the week. So from my perspective, it's really a case of, can the price action now continue trending higher? And of course, for that alone, we would be looking to see, can the 170 level on the GBP JPY be taken out as a result. Now, when we look at the broader perspective, you only have to go to the daily time frame to kind of put some perspective on things. You can see how the last number of weeks, very, very sharp volatility, but we're now looking to see, can we get that impulse and continuation to the upside? And of course, if you were to look at a broader perspective, weekly charts, you can kind of see how, right, we've been in a kind of a period of consolidation over the last number of years, but we're now starting to see pound yen tick up to the upside. So it'll now be a case of, right, if the pound starts to recover, we should start to see pound yen being a very decent bias to the upside, particularly if that weaker yen continues to play out through the rest of the year and the early part of this year. And that's obviously something to kind of play out and be mindful of. Now, of course, the monthly time frames will also indicate that as well, when you see where the yen or pound yen has been over the last number of years. And of course, would it be inconceivable to see a run at 180, 190? Given how much the dollar yen is run this year, absolutely not, particularly if the pound starts to pick up some strength off of clarity within the political sphere. So that's kind of where we are in the pound at the minute. So I suppose from a short-term day trading perspective, it really just becomes a case of, how is the pound yen performing at this 170 level? Can we finally get a breakthrough? And if we get a breakthrough, can we get some sort of structure that breaks the structure, flags back or unwinds the impulse, and then looks for the next wave of the trending price action to the upside? So that'll be something to kind of keep an eye on over the coming days, particularly if the stronger pound dynamic plays out off the back of risk aggression in the stock markets as well. So also with that, we have pound Aussie. So next on our list is pound Aussie. We can kind of see, right, if we go to the weekly time frame just for a second, put perspective on things. I suppose, firstly speaking, obviously very, very sharp sell-off against the pound. Of course, we've seen it across the board, but a very, very sharp V-shaped recovery. So you're kind of looking at this V-shaped recovery. Consolidation has broken down, very, very quick turnaround. So that's how we know there's liquidity provisions, market makers getting involved. When you see sell-offs of this magnitude with a wick of what are we talking, 500-600 points, with a very, very sharp weekly bounce like this, then you know that there's a very, very sharp manipulated or liquidated move in the inside of that. Now, weekly structure pointing out to the fact that, right, We have been selling off in the last number of months, years, etc. We had a period of consolidation before we've seen the last wave of selling. It now looks to see that is that cyclical change in price action going to revert back to a bullish bias in pound Aussie. Now we've seen that liquidation off the lows. We've broken structure through this medium-term consolidation, which we saw right through the summer in above 180. And now it's a case of, can the markets continue propelling higher? Now, I suppose when you look at the 4-hour or daily structure, you can kind of see it here. Very, very sharp bottom, first wave of price action pullback, second wave into this top formation of where we're currently trading at, and another pullback as well. Now, again, if you're looking at the daily, you can see here very, very clearly how the gaps have been formed as well. So you can see obviously the gap closed down. It's obviously gapped higher. It's pulling back into this order block level. Could we potentially see one more impulse to the downside before the price action continues? Well, let's wait and see, because alternatively, when you look at, let's say, the 1-hour structure or 4-hour structure, you can kind of see how the market is progressing into this area of interest here. So initially speaking, last Monday, we obviously had that first peak pullback, second peak. So we were creating bullish order flow. Now, structurally from there, we have taken out the most recent lows. We were obviously quite bullish on Friday. Now we have gapped higher back into this order block level here. So you can kind of see the 1-hour structure here. But there is also 1-hour, 4-hour area of interest up here just above the 180.50 level. So structurally speaking, this has been mitigated. This level up here has failed to get mitigated. So I suppose from perspective now is, if you haven't taken this area or you're watching for maybe a short-term selling potential, it's worth keeping an eye on these two areas, of course, because if it's a case that the price action breaks through here, it's going to set up for a run into this region. And of course, if the markets are taking out this, then the likelihood is that this narrative or potential bias is going to be off the mark, because the price action is going to look to take this higher as a result. So 4-hour charts is obviously quite clean. 1 hour is also even more so as well. So it's just all about giving yourself structure and clarity within the price action. Now, if we move across to pound Kiwi now, very, very quickly. So again, similar scenario. So again, last week we talked about this massive wick to the downside. So when you have to look at the 4-hour charts, this massive instigated move to the downside, very, very sharp recovery into this consolidation structure. Now, I suppose this is where we've been for the last week. Price action holding above this area of liquidity here. I suppose we've broken structure to the upside again, creating a new set of highs. We have unwound this impulse, this buy side imbalance back into this local area of liquidity down here. Although we haven't broken through, you can kind of see how the markets has played very, very nicely off this 195.50, 196 level. Now, structurally speaking, we have now started to rally again. And if you look at the 1-hour chart, you can see how, right, we've gone into consolidation, very, very sharp impulse, negative flag structure back into this area of liquidity, and now we've initially broken through. So this impulse that we saw through last week, or even yesterday, should I say, has taken out all of this liquidity. So this liquidity here has been taken out. This liquidity area here has been taken out, even to as high as this region up here. So you can see how all of these kind of short-term lower highs has been engulfed. Price action is broken out and has obviously pulled back. So normally speaking, when you do break structure, you flag back down, and then it's a case of, well, can we take out this local high here? And if so, then the price action is going to try and continue trending upward. Now, this is kind of where we're currently at, because when you look at the price action, you can see we're still at this 2 or just slightly underneath this 2 area here, structurally speaking. So of course, if I just remove the blue marker for a second, you can kind of see today how the markets has tried to break out through this local top here, but so far is failing to do so. So I suppose we're looking for some sort of fundamental catalyst that will allow us to be the architect for the move, even though on the back end it's a case of, well, let's just wait and see. But structure speaking, we can obviously see how we've made the lower lows. We're now starting to create the bullish order flow, but now it's a case of, can the price action break out through this as well? All right. And I suppose that's something to kind of keep an eye on over the kind of next few days to see, does this engulf, and do we see the price action continuing higher, or do we see another unwind back into these local lows down here at 195? And of course, if we do see this selling off, then the likelihood is, do we see surprise to see markets roll back into 96? And I suppose that would be something I would be looking at. And similar again here on the Aussie, if this level does also fail as well, don't be surprised to see a run at this gap close area here, which is around about 177. So that then brings us over to the last couple again, which is pound CAD. So pound CAD again, massive impulse. So I actually have to go up to the weekly charts to kind of get all this fitted in. So I suppose structurally speaking, notice how the CAD, the pound against the CAD for many, many, many months. In fact, November 2019 into February of 2022, which was a 15-month consolidation before we saw that sharpening in the Canadian dollar, the weakness in the pound, and of course this cyclical bearish sell-off. Now, since then, we've got that V-shaped recovery, which we've talked about. Price action is making its way back into this 158 weekly area. So this area here is kind of something that I would be looking at. Area of liquidity just underneath 158 on the weekly. Of course, we're creating that bearish order flow. So lower lows, lower highs, lower lows, lower highs, and then we get that V-shaped sell-off into recovery back into this liquidity area. Now, I suppose from our perspective now as traders, as market participants, if we see this 158 level, will we start to see an unwind of this pound cable bearish trend, of which price action we can then look at some of these regions, okay? Because we do have order blocks here at 160. We have another one here at 163.50 or just slightly above it. We've got this supply zone area here at the bottom of this yellow rectangular area at 167. And of course, we do have the optimum order block up here at 172.50. So would it be completely surprising to see the markets ultimately take out this order flow and continue trending higher back into this region? At this moment in time, it wouldn't surprise me at all, because given how quickly and how sharp these moves tend to develop, and then you see the creation of a new trend forming over the period of time that kind of follows beyond that. So I suppose this is kind of where we're currently at. If you look at kind of the daily price action as well, similar to what we talked about, bearish order flow, you can kind of see here lower highs, lower lows, lower highs, lower lows, lower highs. Price action is making its way back into this liquidity area here under 158. Now, structurally speaking, if we look at the change of trend, you can kind of see the consolidation, this kind of bear flag, I suppose, a structured price action kind of trying to gravitate to the upside, and of course gets hits again with very, very sharp selling. And then we see that V-shaped bottom, so that very, very sharp decline into very, very sharp recovery, takes out this liquidity area here. You can kind of see in this region here, if I just get my marker, you can kind of see all of this liquidity has been now engulfed. Why? Because markets has broken through. We flagged back down into this region. Notice how we don't break underneath this structure. We maintain above, and now we're creating that higher high, higher low scenario as the markets continue to recover. So it's all about being able to put structure in the price action for yourself, giving yourself rationality in terms of how you perceive things and how you can see things visibly, and then being able to make kind of structured decisions off the back of that. So if you see this here, you can see that very, very sharp sell-off, very, very sharp bearish candle, and then gets completely unwound. Price action breaks above it, engulfs this selling candle, and of course what happens, creates new highs. You can see here, very, very sharp selling candle, very, very sharp buying candle, unwinds all the way back to this area here. So this area here at 153.30 was mitigated on the 1 hour structure, and of course on the 4 hour structure, should I say. And of course then if you look at the weekend, what happened? Well, we closed off the kind of 1 hour area, 4 hour area here. So there's the 4 hour area, there's the 1 hour candle as well, which got mitigated as well very, very cleanly. You can kind of see this region, markets obviously gap higher, and creating that illusion of bullish order flow, kind of pull back. We don't fully close the gap, fairly close though. And then of course what happens then today, pound gets a little bit of aggregated strength, and of course we start to trend higher. So at this point in time, it becomes a case of, well, if we take out this region here, then the likelihood is we're almost guaranteed to touch this 157.50 to 158 level that we've been talking about on the higher time frames. So from there, then it's really a case of assessing the price action, because today, if you're looking at an even shorter time frame perspective, you can kind of see how the markets have reacted. Okay, so we've kind of consolidated. So if I draw this out, nice little consolidation level here, fairly obvious to see. Local highs have obviously been engulfed, so the weekly highs so far this week have been taken out today. You can kind of see that there very, very quickly. So now it's a case of, well, if this is consolidation and this is the impulse, could we potentially see price action pulling back for one more move to then allow the next phase higher to this region up here? So I suppose it's all about being able to validate the structure, validate the price action to create entry criteria or entry strategies for yourself as well. All right. Last two down on the list is pound Swiss. So similar to pound yen and similar to pound dollar, very, very sharp sell-off. Now pound Swiss is really outperforming this week and over the last week or so. So you can kind of see here from the end of September, that flash crash, we had that the impulse obviously comes back down. So similar to pound yen, doesn't break through the structured area here and then grinds higher. So if you look at the 4-hour structure or even the weekly structure first, we'll do the weekly structure first. You can kind of see it here. Massive area, sell-off, recovery, order block level on the weekly mitigated fully. Then we start to see the massive unwind and V-shaped recovery. So again, are we going to see that recovery take out this order flow here, this liquidity here around 116, 117, and recover back into 120? At this point in time, I absolutely wouldn't rule that out. So it's just a case of giving yourself structure, giving yourself clarity. So if we look at the 4-hour structure over the last kind of few days or so, you can kind of see that there. We've got 1 hour, 4-hour areas of interest down here at 106 that clearly didn't get mitigated. But if you look at the 1 hour structure here around 110, 109, you can see actually clearly how we've actually broken up, taken the liquidity on the supply side or the buy side. Of course, we flag back down into this region, we mitigate this area here. So there is a smaller 1 hour candle, but it actually takes the larger one. And then, of course, then what happens? We break back up end of last week or middle of the month into last week, where we went into consolidation for the week. Of course, we're in this 1 hour area of interest, or you can even see it visibly on the 4 hour. And today, what have we seen? We've seen the markets obviously break structure. So we've seen that initial gap higher. Okay, we've come back down to close the gap. You can see that there very, very cleanly at 112.75. Since then, the markets has churned to the upside, taking out the price action. Can we get that kind of final relief rally before we start to see the aggregated move to the upside? So that's something to kind of keep an eye on. Of course, there is the potential, all right, we've taken the highs. If we start to see this unwind, then it's a case of making sure this 1 hour area down here where we've got the marker, depending to see does that actually hold up or not around 112. So that's kind of the focal point for the rest of the week from a selling bias, a selling perspective. Now, last but not least is obviously euro pound. Structurally speaking, massive obviously impulse all the way up to that 92.50. Again, you can kind of see how the pound is really outperforming. So that kind of V-shaped, or this time it's not a V-shaped, it's actually an inverted A. So that massive buying followed by the wick rejection, massive key price action level. We've even got an order block level up here at 92.45. You can kind of see it if you go over wide enough on the daily. You can kind of see it over here. So I'm just going to keep that in check. So that daily order block has was very, very clearly mitigated, as you can see, back into this supply zone. Now, if you look at the 4 hour price action in the last couple of weeks, what's happened, similar to some of those other pairs, we're creating that bearish order flow. So we break the structure, we take out this consolidation here, then there's a bit of manipulation. So we obviously get that short-term recovery, new lows, short-term recovery, price action is trying to hammer this low already. So you'll see here how we've had, this becomes probably a little bit more clear on the 1 hour structure. So if you clear this out, you can see consolidation, breaks out to the upside, fake move, of course. We take the liquidity on the downside. So we take initial buy impulses have been taken, sellers have been taken. Of course, we get that flag back up to this region of interest here. And then, of course, we have a little bit of a gap in the middle of that. Now, if you're looking at this from a 1 hour perspective, you can kind of see how we've got flagging structure, comes down, breaks this structure here. So if I draw it out, you'll probably be able to see it a little bit more clearly. Breaks this, obviously, internal structure. Break a structure, of course, gets the gap down, flags back up to fill the gap, takes the liquidity area on the order block here at the 1 hour price point as such. And of course, what happens here, ultimately rejection, and markets is rolling over. So now it's a case of, well, if the price action can get a closure through this short-term level, you would be expecting this to continue moving south. You would be expecting this broader trend of lower low, lower high, lower low, lower high, and potential lower low somewhere in this region to play out. But of course, let's just see how this one plays out, because of course, short-term perspective, you are coming into an area of, as I said, internal price action, bit choppy, bit volatile. So it's a course of waiting to see if you're not in this from a perspective. Now, of course, this area up here is your opportune entry. Gap down, break a structure, flags back up, mitigates the order block, fills the kind of sell side imbalance. And of course, now it's a case of, can we take out this liquidity? Because if it takes out this liquidity, there's only one direction that this is going into. And then of course, that would be the bias of kind of 84, 85, 84, 50, 85 being the logical scenario. So worth keeping an eye to see how that plays out. That's just kind of a brief on the pound, of course, just looking at some charts, kind of picking apart some of the charts. and of course trying to set a tone for the rest of the week. Okay, so folks, we will be back tomorrow for interest rate previews. So tomorrow we've got Bank of Canada, Thursday we do have ECB, Friday we do have BOJ, and we of course in between that we do have US GDP figures on Thursday, and of course we do have German data coming out Friday morning as well that we will be forecasting through the course of the week. All right, have a great evening everyone, trade safe.